Welcome to The Explainer. Today, we're unpacking a massive, glaring contradiction in the modern gold market.
Let's kick things off with Warren Buffett. He totally nailed the dangers of bandwagon investing here.
Right now, gold is absolutely crushing it, smashing past $3,000 an ounce, a literal record.
But with all these global crises happening, we gotta ask, is gold actually a safe haven?
The data might shock you. During the recent Iran conflict, gold actually tanked by 14.5%.
It completely failed as a crisis hedge, way worse than stocks. So what's driving this relentless demand?
Well, the rise of ETFs permanently shifted average gold prices way up. It's a whole new ballgame.
Meanwhile, China is aggressively hoarding gold. They're scooping up hundreds of tons to literally de-dollarize their economy.
After the U.S. weaponized the dollar in 2022, China bought over 300 metric tons. Wild, right?
With global supply capped around 3,300 tons a year, this massive demand inevitably spikes the price.
So with prices soaring, does gold at least protect you from inflation? Let's look at the data.
Over millennia? Yes. A Roman centurion's gold pay roughly equals a modern army captain's salary today.
But over a decade? Terrible hedge. You just can't hedge 2% inflation with 15% volatility.
Look closely here. Over 10-year chunks, gold prices show almost zero correlation to the actual inflation rate.
So, if it's not a safe haven or an inflation hedge, what exactly is gold doing?
Morgan Stanley puts it bluntly, monetary policy has totally taken over as the main price driver here.
Yep, the crucial takeaway is that gold is heavily tracking real interest rates and Federal Reserve moves.
When rate expectations go up, gold drops. Central banks like Turkey and ETFs aggressively sold off recently.
But hold on, despite those sell-offs, a massive recovery is already on the horizon. ETFs are buying again, China is stacking reserves, and markets expect Fed rate cuts by early 2027.
Because of these macro shifts, Morgan Stanley projects gold will hit $5,200.
That's a solid 9% jump from April levels by the second half of 2026.
But hey, remember history. Buying gold at all-time highs often leads to low or even negative returns.
As you can see, buying during these record highs usually results in a pretty painful downward drop.
So I'll leave you with this. Is this gold's new normal? Or a bubble waiting to pop?